if you slap Bitcoin Treasury on your company, there was an extreme exuberance. Probably to my estimation, it was the altcoin cycle that never came. And that's where a lot of that money chased into. They all copied Saylor, but they didn't actually follow his first rule. His first rule was, make sure the operating company isn't hemorrhaging money. The Treasury companies that you have out now, I think that a lot of them make it. I think a lot of them don't. I think that there's going to be a lot of M&A activity, but I do think that the business model is still viable. It won't have to be a zombie company. The narrative will shift. It'll be real companies.
Quick reminder, nothing said on Supply Shock is a recommendation to buy or sell any investment or product. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed. Hey everybody, Pete Rizzo, the Bitcoin historian on X here with another great episode of the Supply Shock podcast. Of course, the year is winding down. 2025 supposed to be a bull market cycle for Bitcoin. Here we are, barely a half a percentage point up year over year. What happened? To answer the question, we've got John Fakhoury, CEO of Stacking Sats, a full send Bitcoin Treasury company working in the IT world to help onboard and encourage the next wave of businesses, not only to be secure against cyber attacks, but to keep their balance sheets shielded from, of course, all that fiscal debasement and manipulation. John, welcome to the podcast. How are you?
It's good to see you, Pete. Appreciate you having me, man. Couldn't be better.
We'll appreciate getting your insights. Obviously, we've got some folks came into the market this year expecting fireworks. They're leaving, at par. They're at 0%. Where did the bull market go? What happened?
I don't know that there is a what happened, and I wonder if the framing of what expectations are, and what now is fifth, sixth largest asset on the planet. The reality of it is I don't think that the cycles have ever been real, in my opinion. I think that in smaller market caps, the reflexive sort of marketing works. But the reality of it is everybody knows what the supply is. Everybody knows what the schedule is. And that's known to market participants, especially the market participants that are entering with, hundreds of millions and or billions of dollars aren't being surprised that, oh my, there's a halving coming up. And so I just don't think that these cycles have ever been real. I mean, if you look at the investor profile, all right, like first cycle is cypherpunks. Second cycle is people trying to sell drugs on the internet and weirdos playing with tech. And then you got 2017 tech bros, 2021 sort of COVID inflation players, right? Like they've all been, and we, at that point started to see the institutional play. And so I just don't think that these are the same psychological investors. And so the reality is I don't really see cycles in the way they are. We really have had a couple of data points, and I think by 2020 it's been pretty invalidated. So that's my general thought. I think that framework still is not understood by the world. The point is we are the fifth or sixth largest asset. We are the fifth or sixth largest asset, right? You got gold, NVIDIA, maybe Apple, Microsoft, Google, depending on where we are today or where they are. But generally around 5 or 6 or 7. 99% of the world understands NVIDIA, understands gold, understands Microsoft, understands what Google's business model is. Less than 1% of the world really understands Bitcoin. And so, I think you still have massive money that really doesn't understand this thing. And you have a bunch of people just still watching it, even though within the bubble of, say, crypto or Bitcoin, we live, breathe, and think that this thing is permeating everywhere. And it certainly is. But I do think there's a functional impatience. I think there's a functional sort of thinking that the past is going to be predictive of the future. And I still think Bitcoin is going to it's going to perform incredibly well, especially to your investment alternatives. But I don't think that you're going to see 6, 7, 800% gains anymore. I think the world has shifted.
Well, certainly the world has shifted. The dialogue from the people at the largest financial institutions, Larry Fink out of late, talking about Bitcoin as a global asset that's being adopted by banks. Jamie Dimon sort of bending the knee there with the Bitcoin-backed bond. Vanguard doing the same. What are you looking at when you're looking at the traditional financial institutions? The environment has shifted, and there's still a lot of people out there who just don't like Bitcoin, right? They want to keep it out of the system. How do you think that plays out?
So I think you're right to point out, right? I mean, the Vanguard thing I think is the most interesting one. Just to kind of double click on that.
say it. They're just like, we don't like Bitcoin.
Well, I mean, they have, but also they removed their CEO and
Yeah.
they actually put in a favorable CEO. And now, as of Monday, they've now started to sort of dabble in the market, right? And so you're recognizing that we are in a place and now with Bitcoin where you no longer can ignore it. You may not buy it, you may not adopt it, you may hate it, um, but you have to have an answer for it. You have to be able to explain not just that you don't like it, but you have to explain why. Right? BlackRock brought up the other day. I think they announced that the Bitcoin ETF is their largest revenue source, or their fastest growing revenue source. But someone checked me on that. But the reality of it is that Vanguard competes with BlackRock. BlackRock's in a market that's booming. They got 800, 900,000 Bitcoin worth of inflows in just a year, right? I mean, it's the fastest performing or fastest growing ETF, as I
Wow.
understand it, in the history of ETFs. And so I think it's impossible to ignore, right? You got to have an answer for it. If you are a decision maker, if you are allocating capital, you no longer can be like, yo, it's that magic money on the internet. On the other hand, right? Like there's still like a massive way to go, right? Like the the views on, if I know, like within the maxi community, a lot of our friends, Pete, there's a lot of folks that like think in terms of hyper Bitcoinization, and they sort of think of like this revolutionary like explosion on a given day, much like, I don't know, some sort of revolutionary war battle of sorts. But the reality of it
Well,
is that
was it when in the Catholicism, where sort of everyone is sort of we're taken to their sort of the, what do you call it, where they like, everyone goes up to heaven at once. There's the Armageddon.
oh, my mom's gonna be so disappointed. My Catholic mother, who's probably at church right now, is gonna be so disappointed when she watches this. But, dude, the thing is, yeah. But I mean, there is like sort of this parting of the clouds that they're looking for, and the reality of it is, it's just day by day. Take for instance, right? We adapt so well as humans. Any one of the stories that you just mentioned right now, BlackRock, Vanguard, and take the banks out. The UK passes a law this week, basically saying that they're recognizing Bitcoin as property. Crypto tax favorability, nation states, not lots of, but are either having the conversation and or starting to buy sovereign wealth funds, right? There's 180, 200 Bitcoin treasury companies at this point that are public, another 50 to 70 that are private. We have thousands of pages worth of regulations. The government is ultimately literally building, a crypto friendly, Bitcoin friendly bills for us. And the reality is any one of those stories, when you or I got into Bitcoin, would have been the biggest story, would have been the biggest de-risker. And so here you are at what, 90, 80, 90, $100,000. But the de-risking of this asset is massive. The ability to point to, if you are an IRA or if you are an investment manager, or you are a financial wealth manager, the ability to point to and say, Larry Fink is doing this, Jamie Dimon is churning course on this, is significant. And so I think that, like, these passive flows will be like a new place for money to come in. Like we're still not in a place, for instance, right, where like you are getting access to Bitcoin in your 401k as an Accenture or Ernst and Young employee, right? And you're not indiscriminately buying Bitcoin, not knowing it, every 2 weeks, right? You might be getting derivatives if you got some MicroStrategy or some of the miners or things like that, but there's still so much to go. And I think that the understanding of like how much more monetary energy needs to come in to move this thing, say from 100K to 200K, is much more significant than for those of us who are buying it in hundreds or thousands of dollars and watching it go 40, 50, 60, 1,000x, right? And I just think that like temperament and understanding this, having a framing of, wow, look how far we've come, look how far it's de-risked, but also understanding the real challenges of, the world really waking up to this and still not, allocating really much money, in the grand scheme of things.
Well, I think speaking of diminished expectations, one of them has been, just that the Bitcoin treasury companies. I know you're, heading up one of the largest private owners of Bitcoin in the world. There's been, months where 50,000 Bitcoin have been bought, up by these companies, and the market barely moves. Obviously, that's down, about 80% now. Last couple months, only about 10,000 coins being bought by public and private companies around the world. So what do you make that this, just, we've seen this wave of institutional buying, over 1 million coins held by companies, and yet the price hardly moved. What do you make of that?
Yeah, so this is gonna be a really another time my mom's mad at me because this is gonna be my least humble moment. Pete, this is exactly what we thought was gonna play out at Stacking Sats. I remember a vivid conversation with Eric Weiss, with Michael Saylor. at the NACA launch party. Full disclosure, I'm a NACA holder. I own a couple of the other treasury companies. So, I'm not here to bash anybody, but I thought to myself a few things. In the last bear market, if you look at Saylor's dot plot, even Michael Saylor, the seasoned issuer, has a a multi-billion dollar valuation in his company at that time, and now nearly a 50 to $100 billion valuation at this point. Not sure where the market price is today. But the reality of it is that he barely raised money in the bear market. And this idea that everybody's going to be able to pull up a zombie company with no operational footprint, perhaps in some cases no ambition to get an operational footprint, no real companies, and just thinking that Bitcoin, being able to accumulate Bitcoin through financial alchemy was going to be sustainable was just not real. Michael Saylor literally said in one of the conversations we had at the NACA event, he said, by this time next year, there'll be 5 to 700 Bitcoin treasury companies. And I thought to myself, that might be like factually true, but that is not sustainably true. And in that moment, I realized that we were not going to be going public at that time, which was the conversations I was having with Eric and a lot of these other guys. Just this is all full disclosure, right? And so the reality is that this is exactly what I thought would happen. You have to be a real company, right? Like when you're buying a Bitcoin treasury company, I think it's important in my mind to frame it as, you're buying effectively a Bitcoin producing engine. Okay, Bitcoin is a commodity. It is the fuel. The fuel works on any balance sheet. You don't require, a special Bitcoin for a MicroStrategy balance sheet. You don't require special Bitcoin for a framework or a stacking Sats, balance sheet, right? And so what you're left with is understanding, well, then what are you buying? You're buying the ability for that engine to produce more Bitcoin. And so we've been putting like our heads down, focused on ultimately running the most efficient and profitable business we can and finding every way we can to grow without ultimately diverting dollars from Bitcoin. And so I think the sort of the ability to have seen 20 MNABs, right? So here's sort of the silver lining. You got 20 and 30 and 60 and 90 MNABs during the mania in May, June, July, August, that have obviously compressed. And now you have, I think, by my latest research, 80% of public companies are below one MNAV, according to, I believe, your website. And so at Bitcoin Treasuries. And so I think that there is still value in a company being able to get leverage that an individual, a private company that can get leverage that an individual can't get, and or a public company that can get leverage that a private company can't get at incredibly cheap debt, to be able to buy the most pristine asset in the history of the world. That even though we're in a flat year this year, I still believe, I think you still believe, I think anybody that really understands this and is still, mostly pragmatic believes that you're going to be able to outpace the rate of that debt and ultimately produce value there. And so, we still believe in the model. We just didn't believe in the exuberance. And it turns out that the novel kind of crazy idea that we had of actually being a profitable company and not a zombie company was one that seems sort of common sense now. But so kind of like to answer your question, like what's happened is reality set in. And companies still have to be good companies. They can't just buy Bitcoin, rely on NGU. And so, I remember having this conversation with Ansel in summer. He goes, do you think these things could pull back? Do you think they can go below one MNAV? I said at the time, I think even if we had a 20 or 30% pullback, not a 60, 70, 80% pullback, there's going to be a lot of companies in trouble and you'll start to see sellers, at least early. And so here we are. There's not a lot of accumulation. There's not a lot of money being raised.
I think one of the things we saw that a lot of people didn't expect was the breakdown of the ATM model, right? So there's this idea that the premiums in this MNABs would persist, that maybe you wouldn't see the MNABs go below one, but really the retail investors were just diluted, right? Very heavily. In some cases, even like with, strategy. I know a lot of early strategy investors who, are a bit upset about how, how diluted they were in terms of, sure, the company added Bitcoin, but it came at the expense of these capital raising vehicles, selling this debt, buying Bitcoin, diluting shareholders. It does seem like the party kind of died there. How does that come back? Like, what do you think gets retail traders back into these companies? Right, because they had great communities. There's some of these companies, really felt like they were building fandoms. But that sentiment has kind of gone out of the room. How does that come back?
Yeah, I think that you have to be real. I mean, I think it was very, very similar to things that we've seen for years with altcoins. It's basically what it was. There wasn't real value there, and there wasn't a demonstrable way to do it. And I mean, so it's funny because you brought this up, the ATM model and the convert model, right? So Sailor starts with convertibles, then he moves and ultimately sucks out premiums with 3, 4 MNAVs, where basically every time it touched 3 to 4, he sucked out with an ATM, right? And and now it's funny because now Sailor isn't able to tap the ATMs. Instead, he's issuing preferred, instruments. Right? You got all the STRs that I can't even remember, and I think I own most of them. But yeah, he's got these preferred stock offerings, and the funny thing is what everyone is like. Everyone came into the Treasury space, and they were basically saying, "Hey, we're going to do what MicroStrategy did." But there's two things that they failed at that I can see, and to kind of answer the last question and this question in one bit. Um, they didn't follow. They all copied Sailor, but they didn't actually follow his first rule. Sailor was his first rule was, make sure the operating company isn't hemorrhaging money, right? And make sure that the operating company is sound and stable, right? Most of these weren't even operating companies. They were literally intentionally buying zombie companies or launching zombie companies or taking over zombie companies. And so, number two is Sailor's already moved away from the convertibles while these guys were signing some of the most onerous convertibles. I think you're gonna, I've done a little bit of research into some of them. Um, Convertibles are really, really great in bull markets. You know, but in bear markets or if companies not performing and the stock prices, or the MNAV start to fall below one and it starts to become a doom cycle. So you got companies like the Smarter Webco, you got companies like H100. By the way, I own these, so these are my bags. I'm dumping on them. They're going to be in real trouble if we're not at 130 to $150,000 here in the next 12 to 18 months. And so, and they're not the only ones. So it's funny because Sailor's moved away from those things. They're all copying what they thought Sailor was doing, and only really Metaplanet's able to have achieved that so far with their preferred offering. And
Yeah,
so
I say, strategy and then Metaplanet and then everything else. I think after that, still pretty speculative. But what happens to the companies that are below MNAV now? They own some Bitcoin. I mean, obviously, we believe Bitcoin is going to be some of the most important collateral on earth. If you're company number 80 on the leaderboard, you can't get to the scale for preferred stock. You can't get to the scale. You don't have the enough money to pay for the army of lawyers to create a digital credit. What happens to these companies?
they're just holding some of their Bitcoin for Michael Saylor and for me. Um, it's just the truth. And that was, I mean, I knew it. It was the thought I had that in that conversation and that sort of epiphany. And I would say that, I think that the model makes sense at 1.2 to maybe 1.7, maybe 2 MNAV, depending on the engine. But what you got to think about is that these companies might hold a certain position in Bitcoin, some, 10 million, 100 million, $500 million position in Bitcoin. But what is their ability to protect that position? Right. That goes back to the engine that I was just talking to you about, right? Like, how healthy is the engine to be able to actually hold that Bitcoin, to continue to accumulate that Bitcoin? And at what rate can they do that? And so, what we found is that it was pure exuberance. If you slapped your name, if you slapped Bitcoin Treasury on your company, there was an extreme exuberance. Probably, to my estimation, it was the altcoin cycle that never came, and that's where a lot of that money chased into. They were just looking for the next degenerate thing to do. But I think that what happens to them is the natural market takes over. There'll be acquisitions. There'll be, probably an inability to refinance some of the debt. There'll be forced sellers. Um, I don't think it'll be that punishing to the Bitcoin market, to be frank, because most of that Bitcoin has really been strategy and Metaplanet, if you really look at it, in terms of accumulation. So I don't think it'll be like that much sell pressure. And then I think there'll be some natural acquisitions within the space. I mean, Framework still has, for instance, and Stacking Stats still has ambitions to go public. We just want to be a much bigger and healthier company that can, take advantage of the agility that we have as a private company in time when it makes sense for us to do that. And so I might be looking to buy one of these as they may continue to struggle. So yeah, I think there's lots of things that'll happen, but the natural market will take over, and they'll be selling in some cases. There'll be some of them might be able to refinance if we're back in a bull market, or you're going to see the doom cycle that we talked about, it being below one MNAV with really onerous convertibles.
Well, I want to obviously get to 2026. People thinking about the year ahead, obviously still interested in the category. Strategy, MSTR, wave of FUD. We've seen sort of get hit with everything. The MSCI that they might be de-indexed, not qualifying as a company. We have S&P 500, sort of this decision where MicroStrategy is technically qualified for the index for over 3 months now. They haven't been included. Do we see Bitcoin treasury companies stay in the indexes? Do they get added to more indexes? What are your thoughts?
I think, well, MicroStrategy likely stays in the index. I don't think they make it into the S&P probably until we get another bull running pump and another validation to the accumulation, like sort of agility that Michael Saylor has shown through sort of his escalation and tapping various public markets and fixed market debt. So I think MicroStrategy is in an inescapable place. If you do the math, I think it's right. He's probably safe for 80 years at a really tiny growth rate. The company's still spitting out EBITDA. The company isn't really that important in terms of its like sustainability, except for its ability to meet those obligations. They sort of de-risked things recently with their $1.4 billion cash reserve, which is a fancy way of saying, hey, we actually didn't buy
Wow.
Bitcoin, or we maybe sold something, right? But anyway, I don't think that that's necessarily imprudent, right? It's just not really, it's not fun for my buddy and your buddy to be like, hey, I never sell your Bitcoin, never selling, right? So basically selling, right? When you're diverting the monetary energy to another reserve. But I would say MicroStrategy is safe. I think MetaPlanet is recognizing, and Simon said this, that they need to improve and need to acquire operating companies. They need to be able to buttress the large position they have and be able to protect that. I think people recognizing that they're going to have to build healthy companies is going to be the future. In terms of like the treasury companies that you have out now, I think that a lot of them make it. I think a lot of them don't. I think that there's going to be a lot of M&A activity, but I do think that the business model is still viable. And I also think that Bitcoin still swims in macro terms, right? Like, the Fed gets really, really dovish. We starts to see like a lot of liquidity injections. I think Lynn Alden's research on the liquidity sponge of Bitcoin is pretty damn good. I think that Bitcoin absorbs a lot of that liquidity once you see the risk on trade. And I think you can be right back at 120, 130, 140, sometime, middle, late next year. And so, I never make price predictions, right? I don't play that game. I just accumulate and hodl. But the reality of it is I don't think it takes much to switch sentiment. And you see that knowing that we're at 95,000. And if I told you that 2 years ago, you'd have been stoked. But after you touch 125, you come back to 95, you're like, "Oh, what's going on?" Right. So I would say that I think that the treasury model will persist. And I think what you'll have is the next wave of companies that are just real companies that are real operations, that are real businesses that now recognize that this thing is less volatile both ways and is still incredibly useful in terms of their ability to be healthier, to have healthier balance sheets. And so it won't have to be a zombie company. The narrative will shift. It'll be real companies.
Speaking of Q1, there's some catalysts on the board. You're talking about getting back to all-time highs. You got things like market structure, right? The idea that there might be, regulation. We've got, maybe some more IPOs from some more big names. Do you see Q1 as being potentially, the bull run comes back or potentially that soon?
Yeah, I mean, again, I'm really like dovish on bull and bear runs, but I do think that it winds up being, I think you can start to see that we creep back up toward new all-time highs, both in the S&P 500 and in Bitcoin, and other risk assets. So I don't think it takes much from the Fed to pivot. I think they've already signaled as much. You're starting to see the easing come in. You got to believe that Donnie in a midterm election year is going to want to see, you know, good favorable numbers, and he's not going to want to have bad, headlines economically and certainly in the markets. And so I think that there's lots of reasons to believe that there are some tailwinds for Bitcoin, despite what I think is mostly been people shorting, mostly been an AI scare, mostly been a broader market play. And then honestly, Pete, I think we have a lot of friends that have been hodling for 15 years and are like, you know what?
You just want
Um,
to be on the islands.
they just want, or they just want to stay married.
Mm,
Like, and so,
fair.
being able to cash out a few $1 billion in Bitcoin, at 100 grand sounds like a very, like round number that they probably had in their heads for a long time. And so you've seen all the dresses move, you've seen some selling, you've seen some of that. And I think it doesn't change, it takes only a little bit of like sentiment shift to really go draconianly the other way.
Well, talking about the Fed, you mentioned a few times cutting or not cutting. We're getting a new Fed chair, potentially someone with experience in the industry. Kevin Haslett been put up there as the next Fed chair. Does that get the market excited in Bitcoin again?
Yeah, I mean, I think that it's probably priced in, to be frank. Like the reality is everyone thinks it's going to be him, so the market already recognizes it. But I do think that, and we see this with research, right? It's like the Fed announced it more than the actual Fed move, right? If you look back to March 2020, when the Fed said they were going to step in and just buy everything, including treasuries and yada, 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 yields shifted immediately, market shifted immediately before a single dollar was, actually injected into the system. And so I think the signal's clear. I think we're having some weak job numbers. I think you're starting to see, some fragility in some of the macroeconomic front and some of the GDP numbers. And so I think the advantage is we have really the inflation has come down pretty significantly. The job numbers, you have a lot of room still at the job numbers, right? And the other piece of it is we rose the rates were raised so high so quickly that you have a lot of room to be able to cut 25 and 50 basis points. And, maybe you end up back at a 2, 3, 4% sort of, rate. And so I would say that, or at least Fed fund rate. And I say that right now there's a lot of tools in the tool belt and there's a lot of reasons to be able to go to that. And I think the continued sort of bad news is good news. Is going to be really favorable for markets and certainly for Bitcoin. So, I mean, I gotta be frank. I've been biased about this. I've actually been public about this. Frameworks model is excited about lower Bitcoin prices, stacking Sats is booming, and Bitcoin being down is the absolute ideal setup for a really well run operating company, a profitable operating company. Everyone else is stuck, and we're able to buy. So I'm rooting for a longer lower. Um, we're still accumulating, but I expect us to be back over 100 and probably approaching all time highs in Q1 or Q2. I could be wrong, but I'm still long term bullish, irrespective of what the price action is.
The lower it goes in the short term, I think the higher it'll go next year. I want to return to a subject that you and I had some conversations on in 2021. The idea of the altcoins, the cryptocurrencies, digital asset treasuries now. It seems like whether that's through the Trump administration being favorable, sort of removing the old SEC, Gensler era restrictions, that altcoins have survived. In some cases, there may be even better positions to enter these markets than they've ever been, right? The very light touch regulation of the Trump administration has allowed companies like Tron and Binance to onshore and kind of take really what were maybe what we would consider poorly designed grifts and sort of repackage that for institutional investors. Um, how do you feel about the altcoin environment? The Treasury company model was sort of lauded as something that could provide the exotic nature of the crypto market without the volatile, technical cryptographic assets. Do they persist into this next cycle? What do you think is happening here? It does seem like Larry Fink, he's a fan of tokenization.
So one, I do think that there's somewhat of a resurgence that's happening. I never thought that I would be hearing about Zcash again and XRP. But if you actually look at their performance, though, really since their highs against Bitcoin in 2017, the reality of it is they're not really doing. I mean, you could have bought XRP for $4 in 2017. You could buy it for $2.20 right now. You and I could have, we're buying Bitcoin for $1,000 in 2017. So you literally lost out on like 99.999% of your wealth. And I think that still holds to be true. So just because I think you have government favorability towards something doesn't actually change the underlying value. I do think that these things will pump on some narrative, but the reality of it is that XRP makes no sense, right? The ability, there's still a whole flock of people on the internet, for instance, that still think XRP is going to $10,000. And basic math would tell you that at $10,000 at a 60 billion supply of coins, that's more than all the global wealth on the planet. And so the reality is, are these things real or not? Doesn't really change on whether or not you set up zombie shells like some of the Bitcoin treasury companies have, and what has happened with Zcash and Solana and some others recently. But even the ETFs, right? So you got an ETH ETF. That was once not real, right? ETH was in the broils of really, really scrutinous, what do you call it? Sort of regulatory hurdles with the SEC and Hinman and Gensler and that whole ordeal. But the reality of it is the ETH ETF isn't really like attracting a ton of inflows. It isn't performing in the same way the Bitcoin ETF is. And so whether or not you repackage poop doesn't necessarily change that it's underlying poop. And I know that's not popular thing where maybe some of the folks that are listening to this, but I owned all these altcoins, and a lot of our friends owned a lot of these altcoins, and I've spent a lot of time digging into it, and the underlying value is still not real. And even if they are able to attack some market, it just doesn't make sense when I look at this typically to be doing it with a blockchain, and typically it doesn't necessarily solve the big problem, right? Bitcoin's attacking a $400 trillion problem, right? A bad money problem is so massive. And I don't know what the market sizes of some of these other things are. And so I think they survive. I think they exist. I think they languish like, 95% of the stock market does.
Well, the new, sort of sophisticated, positioning on this is that stablecoins have to settle somewhere, right? If the government is going to back stablecoins, if the Trump administration is going to use the stablecoin apparatus as a way to push dollar hegemony overseas, I mean, this is happening, right? This is official U.S. policy now, for all intents and purposes, right? Those have to run on some rails. Ergo, you have this renewed interest in tokenization, which is blockchains, which is tokens, which is some of these things. So you don't think stable coins keep some of this infrastructure around for maybe longer than it would have persisted otherwise?
No, I think
Which
it does. I think it does. I just don't think it's like I don't think there's a sustainable competitive advantage to moving those things around on a Binance chain or an Ethereum chain or a Solana. And you see that, by the way, you see that with Solana. Why is Solana? What does Solana do? It just does what Ethereum does, but faster and it's cheaper, right? And so I think it's a race to zero. I don't think it's that valuable. I think it's commoditized. I do think it sticks around though. I mean, I don't think this goes away. I just think that investing in these things are going to be incredibly, incredibly painful over a 10-year horizon. Maybe these things pump, right? Like, Jen Seth and I always talk about this. A mutual friend of mine. Like, we don't come to play and say that, oh my God, that fart coin isn't going to get you 100x. It's just that, can you hold this for a year, 5 years, 10 years? Is this something I can, put in place for my kids in 30 years? And the only thing that really is interesting in 10 years or 20 years is Bitcoin. Now, if something comes along and is more interesting or somehow solves a better problem, attacks a larger market than 400 trillion, I'm open. But I do think stables have a role to play. We need a digital dollar in terms of being able to, for lack of a better term, and no pun and no advertising included, tether to Bitcoin. I do think that's still important. I don't know if that's important forever. And I also think it's not something that's probably not that replicatable for banks, which is why you see things like Binance or Tether, or excuse me, Binance USDC, or now you got Ripple that I think has actually gotten a charter for a bank. Why? What are they trying to do? They're ultimately trying to mimic what the banks do. And so I asked the question: why not the banks that are entrenched already serve as this sort of this commoditized utility sort of settling layer? And I've never had anybody give me a really good answer. So I don't know. I think these things persist. I don't think that they're going to be that interesting.
What do you see in 2026? You think about, we've always kind of had the story of like new market entrants, right? Even when you described kind of the cycles, first it was the cypherpunks, then it was the drug dealers, then it was the VCs, and there was this progression. With Larry Fink coming in and the banks coming in, who's left, right? Who's the next dragon for Bitcoin to slay? Do you get a sense that there is somebody else on the global stage, or is this sort of it? Bitcoin is in the upper echelons and there isn't a larger dragon out there?
No, I think there are, but a couple of things. I'll break this into three. I think the banks have come in, but have their salespeople gotten to everybody, and did they get to them on their first conversation? Right, right. I think it's going to take a 3 or 4 year period for sort of now that the banks are here and the investment advisors are here and the Charles Schwabs are opening spot Bitcoin purchases, not just IBIT or whatever the ETFs are of your choice. But I do think that that's not a conversation that happens quickly, right? If you ever had your like permanent insurance guy at Northwestern Mutual or Mass Mutual or whatever, like those conversations persist over months and years. They're not quick decisions. So I think that there's still an effect that the banks are going to have for a long period of time. I think the nation states are really easy. And I think the reason is they're not operating companies. They can print. They're not going to be forced sellers like Treasury companies that have convertible notes coming due. And so I do think the nation state play is one of the next big dragons. But I think the other thing is sort of the matriculation to traditional markets. Like Bitcoin still isn't like getting passive flows, right? And I think one of the reasons that you see sort of these high MNAVs, aka PE ratios, price to earnings ratios, right, for for companies with actual, profits and earnings, is because when you have a 401k and you work for, I don't know, you work for Stacking Sats or you work for Accenture or you work at the hospital, you're not paying attention to what the market did. You make your contribution, it's set it and forget it, and you're buying indiscriminately. And Bitcoin is still not um, in most any large 401k plans. ERISA, which governs 401k plans, is incredibly arduous. It's incredibly difficult. It's incredibly vanilla. It's like trying to, create a catering meal for 1,000 people while everyone has allergies. And so I think that the traditional markets, in terms of the banks and traditional markets, still have a lot ways to go and still a lot more penetration. Just because they've signed up to be here doesn't mean that's the end of their push in terms of being able to attract more monetary energy into Bitcoin. But I still think the nation state thing is real. But what I'd really be interested in, what I've highlighted is when Bitcoin is able to get passive flows in a much more significant way. I think that starts to bore you to $1 million and to $5 million, and you start to see that 20 to 30% just year over year CAGR in a really boring way on your $1.3 million per coin price.
I love that. Bored to $1 million. That's an interesting way to put it. Okay, one final topic I thought it'd be fun for us to chat about. Going back to the clubhouse days
Oh
of
God.
21. Well, there's this idea of the Bitcoin culture, right? And what's happening with it. I've sort of been out there on podcasts opining about this, taking some slings and arrows. But there's this idea that, for a while, the Bitcoin culture was very useful, right? We needed to delineate between Bitcoin and the other cryptocurrencies. There needed to be a strong cultural identity. It seems that Bitcoin is moving away from that, at least into different tribal camps. Kind of people are resorting. What's your forward look on the Bitcoin culture? Can the Bitcoin culture scale?
Good question, man. I actually ponder about this myself, and I've thought about. I went to a Bitcoin meetup in Chicago for the first time since before COVID. And three of the first questions I got were, when are you starting Sunday Satoshi service again? And then Knots versus Core. And the
What?
third time we went Knots versus Core, I almost casually was like, what's the most polite way to not want to talk about this? Um,
Yeah.
so so I would say this, man. I think it's still healthy. I think it also gets to unhealthy levels, and that has sort of natural mechanisms as well. Like, I love Max Kaiser in 2011, and Max Kaiser, who's a super kind person, that shtick is just not working in 2025, right? Like yelling and burning dollars doesn't have the same effect that it did on Alex Jones's show in 2011, 2012, 2013. So I think like there's sort of an overblown thing. I think this Knots versus Core debate, which I think is kind of the center of the Bitcoin culture, is something that in 5 or 7 or 8 years, Pete, I think we just like sort of forget about. Like it becomes like a BIP 119 covenants thing. Like no one's talking about that anymore, right? I don't think it raises to the height of block size wars of 2016, 2017, because it forces Luke. Like if you think about this game theoretically, and I don't want to like alter the game theory by putting this out there, but like Luke has to make the move, right? Because Core has the default settings. And so Luke has to make this move. And I think Luke is too rational. And I actually think he thinks Bitcoin's too important for him to really fork this. And it doesn't matter who you are, right? This is one of the other lessons that we've learned. Whether you are as beloved as Trace Mayer, people forget that, right? Or you are, I
Book
don't know.
Grace, we're beloved,
Right. I mean, Bitcoin Jesus was Bitcoin Jesus, right? And where is he in the Bitcoin community today? And so I think it still matters. I think integrity, I think, the arc of being right over the time of history still matters because, if you believe in your long Bitcoin, who are you going to be dealing with in 10, 12, 15 years, right? And the reality of it are you going to want to do business with the guys that are now, you know, 100 million, single digit billion, deca billionaires, guys that are moving capital in real ways and moving the world in real ways, that know that you were, on the wrong side of history, or knowing that you attacked Bitcoin, or knowing that you were, launching, scam coins, et cetera, et cetera. And so I think that the culture is still healthy, but I also think you and I have gotten older and it is incredibly cringe a lot of the time. It's one of the reasons we did Sunday Satoshi service. It was like the meme that allowed for like a safe place where no matter how toxic you were, if you showed up
Mhm,
there, sort of this idea of it being church, everybody behaves in church, right? And so
mhm.
you would have someone as toxic as what Udi used to be, right? Or Tino, or on and on. All the guys that came, Max Kaiser, right? All these guys that came through that might have been considered really toxic Maxis. Um, they were able to calm down and ultimately have a conversation in rational terms. And the beauty of that is that like Bitcoin wins in logical terms. Bitcoin wins in truth. Bitcoin wins because of math, right? And so, we sort of have truth on our side. And so I think it's healthy. I think it's cringe. I think it persists. I think it becomes more difficult to scale, but like maybe more to frame it, thinking of it, instead of scaling, it's sort of like an immune system response where it can still be effective, right? And it sort of comes out at the certain times. And, sorting through that in the moments can be sort of tricky, but I think over when we look back at this in a few years, we're gonna be like, oh yeah, I remember the core versus knots debate, and it's just gonna mean nothing.
John, always insightful to pick your brain. Of course, 2026 just around the corner, expecting some big things for the market. Stacking Stats, where can the folks learn a little bit more about what you're building out there in the corporate space?
Yeah, man. So feel free to visit us at stackingstatsinc.com. We have our strategy tracker there, so you can follow everything related to our sort of Bitcoin accumulation strategy. I'm available. Find me at Pay It Forward Dad, and we have a Stacking Stats community on Twitter. We're just out here working. So people are always like, "Hey, why are you so quiet?" And it's just like, "Cause we're working." And so, yeah, man, we're just digging in. Really thrilled with the performance this year. Framework has been absolutely the operating company, the IT company that Stacking Sats is the parent company of. It's just been absolutely booming. We've launched a new AI service managed service platform that's been just absolutely changing a lot for our business and for our clients. And so, whether you're someone that's looking for sort of business IT, or cyber or cloud infrastructure or managed AI solutions, certainly feel free to reach out to us. And then if you're just looking to kind of follow our story, or interested in sort of future investment rounds, just follow me and at Pay It Forward Dad and Stacking Sats Inc. on Twitter. And, we're keeping everyone apprised there.
Yeah, it's the important part, right? You got to buy the Bitcoin, but then you got to hold it and secure it. We've got a lot of voting accidents along the way. So appreciate what you guys are doing to keep everybody secure. Certainly a lot of scary stories out there in the press related to Bitcoin loss incidents these days.
For sure. For sure. Well, always good talking to you too, Pete, man. Appreciate you having me as always, man.
All right, John, appreciate you coming on. If you're still with us out there on YouTube, X, or Rumble, feel free to give us a like and a subscribe. We'll be back with some more episodes after this. For now, this has been Supply Shock, a Blockworks podcast.